Hello, everyone, and welcome back to the Daily Gold YouTube channel and our weekly Friday recap. Thank you so much for tuning in. Hope you had a great week, and I hope you have a great weekend ahead. In this video, we're going to recap the week, also talk a little bit about the end of the month and the end of the quarter on Monday, which is really more significant than what happened in the last few days. With that being said, interesting week for precious metals. You had gold flat on the week, silver up by 2%, but the miners were down 2%. So interesting week mixed across the board. Let's get into the video and the charts. Okay, so here we're looking at the weekly candles for gold here, silver here. Then this is the silver weekly line chart, which for those of you who have not followed recently, I've been discussing this in recent weeks because it beautifully illustrates the resistance here and how silver has twice successfully back-tested that resistance, and now there's pressure to the upside. Last week, silver was stopped at this $32 resistance. Not a great candle last week, although because of where the close was, it was actually the highest silver close in weekly terms in 11 years. Now this week, silver again moved higher, closed at $32.39, so it did close above the $32 resistance. However, if you want to be a stickler, look at this candle. Silver traded, I believe, over 33. I'm sorry, I don't have that right now, but you can see where it closed. It closed at $32.39. So earlier this morning, I remember seeing on my Twitter feed before I updated it, there were all these morning tweets, a silver breakout, silver's ready to run to 50, et cetera, but people were selling that strength at the end of the day. And you see that often in precious metals, which is why you have to wait until the end of the day, the end of the week, or the end of the month to really call a breakout, unless it's really overwhelming. I mean, that's not the case if silver shot up to 33.5 this morning and then it held it for a few hours. That'd be overwhelming. But anyway, so with respect to silver, 32.39, I would have preferred to see it consolidate here, and maybe it still will do that. But you do have upside, a strong upside target at 34.35. Just like with gold, you have a strong upside target of 3,000. The last two candles 2 weeks ago, this one not that great. That's an inverted hammer. That's bearish. This week, typically not the best candle, but it's not bad. So kind of meh in my opinion. But still, the trend is up. Gold and silver do have good momentum, so I still think we're going to see 3,035 before any real sustained correction or weakness in the market. So here's the monthly chart for silver. We can see last month, really nice candle after 2 or 3 months of back testing, this resistance here. So we can see these candles. It back tested it. Each of those months, it closed off the low of the month. That's very important. And then last month, you had the strong close. In monthly terms, that was an 11-year high. So significant monthly close. And again, 35 is the next target. This resistance goes back to 1980, where there's resistance at 36. So you can see here, 35 is a significant level on the monthly chart. I mean, it's support here. Then it tried to get back above 35. Then it fell apart. So 35 on the monthly chart, this is really significant resistance to me. So that's what I'm looking at. Now, the quarterly chart, we have the $32 resistance. This is resistance 32, that is, on every chart except the monthly. So quarterly, daily, weekly, they all show 32 resistance as significant. So you have this close right here, and that was in 1979, actually, December. And then this is the highest quarterly close right here. It was actually in 2011. But we can go back and we can see 32 right here, these quarters. It failed at 32, had one close above it. So 32 is significant resistance. And this was the last quarter where we traded up to 32, up to 33 actually, but closed below, closed below 32. And then the previous quarter, we also traded up near 33 and closed well below it. So 32 is stiff quarterly resistance. So the point about silver is it could take a little while to get confirmation of a breakout. We have to look at the monthly and quarterly charts. Just because it shoots up to 33 or 34 on the daily or the weekly, that doesn't mean it's overcome the resistance in the mid 30s. Like we're going to need to see a monthly close or even a quarterly close. And by the way, 32 is important. I forgot to put this chart in. It's the yearly resistance. So if silver can close above 32 at the end of December, that's really significant because you look at the yearly chart, you see resistance here and then resistance here at 32. So tons of reasons why 32 is significant. So moving on from silver, let's look at gold. Obviously, super bullish after breaking out of the super bullish cup and handle pattern. You can see here the last month didn't quite close at the high, but you can see that's still a fairly strong close. Again, measured upside target of 3,000. And looking at the RSI here, I looked at where we are now, which is just below 80, and then I put this line here. And so we can compare and see where the market was when it was trading at a similar monthly RSI. And so that's what these vertical lines show. Now, to add some context, these thicker lines, I think, to me, are the best comparisons for where we are because we're early in a new, secular bull market. It hasn't been confirmed yet because of the 60-40 strength, but this is early in a new secular move, okay? This is a breakout from a 12, 13-year pattern here. I mean, this is hugely significant. So similarly, the only two similar breakouts, you have this one here when it broke out in 72, which was, almost, is that like a 38-year, 39-year breakout, something like that? So that was a 38-year breakout, even though that was artificial. And then look where the market went. I mean, the market was artificially low at that point. So that's part of why you had this big move. But look what it did there. Then you have this 20-year base here, 22-year base, and this breakout in 05. So that's why I made this one thicker, made this one thicker as well, because that's a bit of a move after the breakout. And this one right here, this is the breakout from this pattern right here. These thick lines show where we are. Certainly gold can correct, but we're not, maybe at 3,000 if we get there in the next couple months. But I'm not worried about a big correction yet based on where we are with these lines, these momentum lines. And before I talk about the stocks, just want to pitch my service. Owning the best stocks, the best juniors, and the best miners is going to outperform GDX, GDXJ over time. If you really want to get serious with this sector, you need to have and build your own portfolio. You can outperform GDX and GDXJ. You have a diversified portfolio of really good companies fundamentally, but also that have huge upside potential. So that's what I do at the Daily Gold. We'd love to have you aboard. Some good news out of Mexico, it looks like. Mexican stocks are just jumping. So that's something I'll cover this weekend. Plenty of other stuff to cover, some news on some of my favorite companies. But sign up for the Daily Gold. I mean, our top 10 company table, our watch list table, this makes everything really easy for you once you come aboard. You don't have to spend 5 hours reading every report. These company tables will fill you in immediately on what we own and what our favorite stocks are. Okay, so let's get to the sector and the stocks. And here we have a monthly breakout. I mean, the end of the month, the end of the quarter, good closes all around. So GDX, GDXJ, this is a monthly breakout here. We actually did it the month before in August, but you really need this for confirmation. So this was the second highest close, monthly close for GDX since right here in the end of 2012. So this is a significant breakout. It's a 4-year breakout on the monthly. Same thing on GDXJ. This is a 3-year breakout. And so when you have a monthly breakout ahead of a daily or a weekly breakout, it's more significant. Remember what gold did. I mean, me and Vince, Professor Vinny, were talking about this, how at the end of last year, gold had a breakout on the monthly in November. Then at the end of December, I believe it had a quarterly breakout to a new all-time high. It hadn't cleared 2,100 yet. It took 3 more months or two and a half more months to do it in daily and weekly terms. But when you get a monthly breakout first or a quarterly breakout, that's more significant. So you look at these weekly charts here and you say, oh, well, how is GDX going to break out from this big base? Here's GDXJ coming up. There's lots of resistance here. And that's true. And we could pause for a little while, but we've already broken out on the monthly. So that's more significant. It doesn't mean miners are going to move higher immediately or next week. It's possible, but looking at the weekly candles here, they're running into a bit of resistance here. We can see. a little weakness coming up. I mean, that might happen, but I'm not concerned about it either way. If you have a portfolio of strong companies fundamentally that are performing well and they have good upside potential, I mean, they can outperform the market. So I'm more focused on those than the sector charts. But of course, I follow these all the time. I'm following breadth indicators and all those things. But long story short, the weekly charts show the miners have run into resistance, SILJ as well. But the monthly charts are showing they've already broken out. So sooner rather than later, we're going to see breakouts on the weekly and the daily charts for the miners. That's all for this week. That was a little long, but thank you so much for tuning in. Really appreciate it. Leave a comment. Let me know what you think. How are you thinking the sector will perform over the next week or month? Love to hear your thoughts. Again, thank you so much for tuning in, and I'll talk to you guys again on Monday. Have a great weekend.